All right. All right. That's enough. Oh man, why am I so super duper blurry? Let me try to fix this. It's always something. Let me see if I can get this cooking real quick. It's always something. Give me 1 second. And then, can y'all hear me? Yeah. And exactly what I thought was the issue. Well, let's turn that up. Na, 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 na. Hope y'all doing great. Hope y'all doing good. Okay. I'm out. Look at that. Few clickers of a button. And we are in action. Audio sounds good. So please don't tell me that y'all can't hear me. In fact, I was looking at that photo that I had while the stream is kind of I'm getting started kind of thing. And I was like, man, can y'all even see that? I mean, let me know in the comments or in the replay, or in the live chat, whatever. But just let me know so that I'm fully aware to maybe make it bigger on the next go around. But there is a poll that I unfortunately like already closed out, but I'll reopen it because I'm curious to hear you guys' thoughts when we get to that point. But yes, mortgage rates, if you guys are not fully aware, based off of the thumbnail, the title, yeah, it dropped. So maybe not, it dropped to the point where you're super duper excited. It dropped just a little bit. But sometimes that little bit will help a lot of people get into the market. So it could be huge, huge news for those individuals that are on the sideline and kind of just needed that small drop. Because if anything, that could make the difference between getting a 7% interest rate or a 6.5, right? Because that's kind of where we're at. And, I'll definitely show you guys where exactly we're standing, just so you guys are fully aware. But I definitely want you guys to all know that, yes, that's what's occurring and, how it could save you money because, that's what I'm all about. I don't know about y'all, but if you don't like saving money, then, you're on your own. Or at least having the advantage, being protected, finding the right home, that's kind of what I'm all about. And making sure that you guys, I can help you guys, especially if you're planning to move this year or even next year, to be in a position to be able to do so and not get caught red-handed just because of you just were unaware. I mean, unfortunately, these are things that aren't really taught to us. But stick around because towards the end, at least whenever I get to it, don't want to gatekeep it now because I really want to discuss this mortgage drop stuff and what is also being talked about in terms of where things may go. But I do at some point in time have like a motivated seller section that I definitely want y'all all to tap into. If there's one piece that I really want y'all to hear or see, it's that particularly because then you'll be able to see exactly what homes, what markets that I've at least found have motivated sellers that if you really wanted to make an offer on it, you could probably get away with something. So don't ever say I don't give y'all no game, no real value. But if you didn't tap into the last stream that I did, that was a stream where I really talked about where our buyers even looking. Right now, for the most part, it's most people are looking outside of the cities, the major metro areas. In fact, I think it was like 3 out of 5 are looking outside of those areas. I mean, it's gonna come down to affordability. That's truly indeed the only reason that I could think of why somebody would look outside of the major metro because everybody wants to be in the major metro area, especially as close as possible to the downtown area. I was speaking to a guy today, and John brought up a really good question. We're gonna get there. We're gonna get there. Right now, it's still in the sixes, but I'll show you guys specifically where they're at. But yeah, there's a lot of buyers looking outside of those major metro. And I should have said, what's going on, John? I mean, I hope you're doing well. Hope you're blessed, man. But that's the case, right? So if a lot of people are looking outside of those metro areas, then you want to look for those opportunities. I know builders are building outside of those big metro areas, so look for those concessions if they're even still offering. Look for those, prices that are getting cut if that's even happening in your local market, because of course real estate is extremely local. But John pressed the button on me, man. I mean, he did it. So, enough of me talking. I'm going to go ahead and share with you guys exactly where the mortgage rates are. And of course, you can't see that. So, as of today, today's the 20th, right? I think so. Yeah. As you can see, 6.61. And this is generally speaking for the 30-year, right? And John, I guess this is right up your alley in regards. But something I want to kind of just share with this, even looking at this right now, it's the 6.61 is just a general, right? That doesn't necessarily mean that's exactly what you're going to get, because there are different lenders that do operate a little bit differently, where they have their own criteria or even their own requirements. So their own spreads essentially. So just keep that in mind. That's currently where it's at. You can kind of see, I mean, this is based off of last year. You guys can kind of see how it did in the previous year, right? Or at least from August of last year to this year. And as of right now, I mean, we're going to go through a few articles that's going to talk about this, but this is the lowest of this year at this current moment. I mean, are we going to see lower? I mean, the world may never know until it actually happens. I think that's the $1 million question, right? Are rates going to go down? Who knows? I mean, I wish, because I think if it goes down, then that's going to help a lot of buyers get into the market, because I think this is what's holding a lot of people back. But this is how it really performed in the past year. And before I forget, I kind of jumped the gun. Well, John made me jump the gun, quite honestly. He's like, hey, let me know where the 30-year fix is. I don't want to hear you jibber jabber right now. But no, seriously, on a serious note, if you guys don't know, on Wednesdays, I'm here. I try to do it on a weekly basis. Right now, it's bi-weekly, where I'm informing you. If there is an important piece of news that I need to share with you guys immediately, just know I will do a surprise live stream on that Wednesday at 7 p.m. Eastern. So tap in. Make sure you have your the bell thing on. Make sure you're liking this video. Do all that good stuff just to get the word out about this stream that does happen. But this stream is, again, to help you and prepare you for if you're trying to buy. If you're on the replay, just comment #replay. If you're here live like John is, salute. Appreciate you for being here, and I'm going to make sure that this is definitely worth your time. So one of the questions that I am going to discuss a little bit later is it best to buy now, or should you just wait till 2026? Because I hear that question quite honestly too frequently. And man, we'll touch upon it later. But this is where we're at with the 30-year fix. If you guys really want to take a look at the 15 here, I can actually pull up this here. And there you go. Right, as you guys can see, right, it's a little bit different. That's why you guys can always look at the mortgage rates and see where they're at. But everything is gonna tell you a little differently. But I would say this is probably gonna be the closest. This and the Mortgage News Daily are my two favorite sources when it comes to mortgage rates and identifying exactly where they're at, or at least the ballpark. But if you are looking at the 15, that's also something you can take a look at. But yes, as I mentioned already, right, this is the lowest this year at this current moment. And so let's just really see what they're talking about, right? So 6.58, as you guys can see, and this is an article that was written as of August 14th. So as of then, based off of Freddie Mac, which I think this is here updated on a weekly basis, which makes a little bit more sense, which is kind of why I like to use the Mortgage News Daily, right? Because they're updating you on a consistently on a daily basis. Right, you'll get more of a concise update as far as what's really going on with the mortgage rates. So, based off of that, we saw 6.58, sorry, percent mortgage rates wise. And that base and what pretty much stirred all of this is based off of at least what I read and what I heard or what I even listened to on podcasts. All of this is not due to because jobs report came in. If I'm not mistaken, it was jobs report and inflation data. Inflation data, I think, is what really caused it to kind of come in a little bit sooner, as you guys can see in the article in itself. But with that inflation data, I think if I'm not mistaken, it was a little bit. I'm not remembering exactly what occurred there, but I think it says it right here. So why not just read it for crying out loud? Inflation data released on Tuesday showed consumer price growth maintaining pace by some measures, such as the top line inflation, and accelerating by others, like core inflation. Had inflation come in under expectations, steady prices at the same time that job growth is stalling would be a doubly clear message that interest rate ought to come down. So essentially, that is what caused interest rates, mortgage rates, whatever you want to call it, to come down. But I will say, it's more of the spread that is closing in. It's not so much of the data in itself that pretty much pressured it a little bit downward. So if that spread is closing, that's actually good because it's going to consistently, I mean, at that point in time, if the spread gets closer and closer, then it will help. But honestly, I'm curious, and this is kind of like my poll. Maybe I'll just drop another poll while I'm here, right? Or if you're here right now, let me know. Is this enough for you to really be like, all right, it's time to get the ball rolling, or are you gonna still continuously sit the sideline and say, I'm gonna continuously wait and see what exactly occurs? Let me know in the comments. Let me know in the chat what you guys' thoughts on that because even despite that, I think most people are waiting for closer to sixes. I think people will love fives, but I'm not you guys. Everybody's scenario is a little bit different. So, and it's interesting that this is all happening when the seasonal trend is coming to an end, right? When most people, this is the crazy part, most people don't buy in in these seasons, and that's when the rates are coming down. Shockingly, right? You see how this all plays out? It's insane. Sometimes you honestly cannot make this stuff up. I still look blurry. I wonder if the camera's dirty. I'll deal with this later. But as the real estate cycle is on a downtrend, that's when rates are gonna, at least that's what it seems like it's happening. But let's go ahead and move on. Oh, actually, here's another look at it. But we just looked at it from a year aspect, which I like a little bit better. Speaking like right here. Oh, shoot. Let me share my screen. My bad. So you guys, I like this better because you guys can kind of actually see. But if you really wanted to see how's rates been over the course of time, here it is for you. The 15-year, just for your awareness, is always going to be less than the 30-year, of course. So always expect that. Don't necessarily think or see that there's something wrong. Where's all my other stuff? Well, maybe if I go to just me, that's one. There we go. Oh, interesting. I didn't know that. Just learned something new. However, what does this really all mean for you? Well, a lower interest rate just means you can afford a little bit more. Whether you can afford the home, a larger home or your monthly payment, right? If you're buying at the top of your budget, just be careful because there is something called HOA fees. There are property taxes. What else can there's insurance? All that stuff can really hinder. And I think that's what's hindering a lot of people, in fact, because a lot of individuals bought at the top of their budget because they had the ability to, right? Especially when their mortgage rates were in the threes or for whoever got it in the twos, right? Everyone bought, I think personally, at the top of their budget, not necessarily thinking about what may come afterwards. So just be cautious of that. I mean, if you guys really want, let's go through a mortgage calculator real quick and see. So let me go ahead and enter Raleigh zip code. I'm going to take property taxes out of it because, quite honestly, property taxes varies by the property in itself, so that's kind of hard to tell you. Let's do, because I know generally the average is like about 10%. Well, it's more like 9% of what most buyers are going to put down, so let's do that. And I want to show you the difference. So let's just say we just saw it at 6.61. And so I want you guys to see. So this isn't the number. Let me go ahead and update it. So for a $425,000 home, your monthly mortgage is approximately going to be about $2,445. This is the beauty of, let me go ahead and zoom in a bit. This is the beauty of interest rates and mortgage rates and how they operate. If I just change this to 7, so remember that number there. Literally a whole $100, and that's not even a whole percentage point. Right, so this is why mortgage rates are extremely important in your buying power and essentially what you do trying to get into the real estate market. So you can always refinance, but do at your own leisure. Make it work for you. You can always even go after, actually speaking, you can always look for opportunities like temporary buy downs, which I do know a lot of builders in new construction is offering. Still to this day, I mean, it's very few. I see more of like builders giving out, what is it, like a specific dollar amount. And they're like, yeah, you spend it how you want. Whether it's you want to use it for closing costs, buying down your rate, or, I mean, those are really the only two things they'll allow you to do, quite honestly. Or pay down your own, maybe pay down some debt that you have. But I'm not seeing too many buy downs. And when I say buy down, I'm talking about like 2-1 buy downs, 3-2-1 buy downs. I know 3-2-1 was a really popular thing back in like 2022 when rates shot up tremendously, but now we're not seeing those. At least I'm not seeing it here in the North Carolina market too much. And if you're not aware of what a buy down is essentially, so for the 3 years, well, for the first year, which is 3 years out, your mortgage payment will be 1, and then your rate changes after a year, and then it changes another time, and then that's when it's fixed. If it's a 2-1, then it's going to be whatever that rate is at the second year, and then subtract that year and whatever the mortgage rate then, and then it's fixed, essentially. So it's a way to lower, it's like temporarily lowering your mortgage payment. But I mention all this because I saw this news article. Well, it wasn't a news article. It was more of an announcement that came from Fannie Mae. And they pretty much were stating, hey, you will be notified lenders should be notifying everyone at least 30, no. Was it 90 days? I think it was like 90 days of when your monthly mortgage payment is going to change based off of the temporarily buy down, which means a lot of people got caught off guard and has been complaining because you don't see these announcements unless there are issues occurring. So if you or you know someone that does have a temporarily buy down rate, they got swilled into that because that was probably the best way for them to go ahead and qualify. Then just let them know, like, hey, this this announcement came out, they may already know, and if they do, great. Make them aware that this is possible. This could happen, and it will happen, especially if you got the temporary interest rate buy down. So I'm gonna leave you guys with that. I'm gonna allow you guys to go ahead and do that duty, or if you don't want to share that, then just share with them this stream and just be like, "Yo, listen at what number are we at right now in terms?" Just tell them listen at about like 24 minutes in, and go find out um, at what how important, not what important, but what's it called? What they need to know if they have a rate buy down plan. Because for people to be shocked about that, it's like, dude, you should have known this from when you get in the mortgage to begin with. But people forget. Can you fault them? No, absolutely not. In fact, if you don't believe me, here's the article that was actually released. So, where is it? There it is. So, clarifying that mortgage loan, blah, 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 servicers must send notification to the borrower detailing a pendant's interest rate increased 90 days prior to the payment change. Yeah, everybody and their mama was crying, essentially. I shouldn't laugh. That's not funny. But yes, this is why you guys got to really know what the heck is going on. Because this stuff right here, this is the type of stuff that if someone is not prepared or knows what's happening, this is the type of stuff that hurts people and essentially makes them lose their home. And that's not why we get into real estate. We get into real estate to make sure we put a roof over our head for sure, but also to take advantage of the American dream, Be able to build some equity while you're at it. It's literally a house is a forced savings account if you really think about it. You don't have to believe me when I say that, but if you really think about it, you're putting down a mortgage towards something that essentially when you sell it, or if you even decide to sell, you'll go ahead and make a profit. Hopefully you make a profit if you bought in the right place at the right time and at the right price. But that's how I look at real estate, at least. And if you don't sell it at all, then you have the ability to take a loan out against it if you need money for whatever the case may be. This is not financial advice. This is just me just giving y'all game on what are the abilities, what are the things that you can do with real estate in itself. But should you wait? Should you get in now? Let's go ahead and tackle this question because I hear it quite too often. And it doesn't frustrate me, but it's like, if you're ready, just shoot. Like, honestly, who cares about what I'm about to say? Who cares about what everybody else is about? Who cares about what everybody else says? If you're truly indeed ready, that is the most important piece. If you're financially ready, if you're emotionally ready, and that's a big one, because some people are just not emotionally ready for the roller coaster ride of trying to buy a home. And I chuckle because it's like, it's a real thing. Some people will get stressed out. Some people, I actually heard, like, I was in a room not too long ago, and there was a question that was posed. It was, how many people have seen their buyers cry before, or at least their clients cry during a real estate transaction? And I want to say like a third of the room raised their hand. I mean, this is just be financially ready, emotionally ready, to be able to take on this, because it's essentially a new job, and it's kind of how I look at home ownership at the end of the day. But should you wait? That's an answer for you. I'm going to provide you with the details and the information to make sure that you have the information to make that decision. But just know, for one, this is the market that we're in right now. There are not a lot of buyers, because most buyers are just sitting on the sideline for now and just be like, you know what? This is not my market. Y'all could take control of this. I need my mortgage rate. They need the mortgage rate, if anything, to come down. Or maybe prices is like not their best friend at all, which is another reason why they want mortgage rates to come down. So you don't have a lot of buyers, but you do have sellers. All right, sellers who are going to sell because they have other plans, or they have things that they need to do. Something I do want you to know, though, sellers do have the ability to say, you know what, we're just going to take our home off the market. Or I do hear that this is a new thing, a new trend occurring within sellers. Sellers are looking at, if, like, let's just say a neighbor posted or listed their home on the market, and the neighbors are being nosy, essentially looking to see the activity, seeing how that home is performing on the market. Some neighbors will actually decide to put their home on the market based off of the activity, based off of what's happening with one home, right? So in that case, in that if there is a home that literally doesn't move, doesn't come off the market at all, most sellers now are saying, I'm not gonna even list the home. So that's removing the inventory aspect. So that doesn't necessarily hurt you, because if there's less inventory, prices will either be stagnant or they'll continuously rise. In certain areas, honestly, it's still rising. Maybe not tremendously to the point where it's hurting a lot of people immediately, but it's still rising. So, yeah, if you want to go ahead and read all that, go ahead, knock yourself out. I just kind of gave you the breakdown of it all. I mean, at this point, I'm scrolling, so you probably can't read it, but here's what the housing forecast is for this year, also for next year. And I just want you to kind of see where our prices at least anticipated to go, where our mortgage rates anticipated to go. So, home sales, they anticipate a 3% increase. They're anticipating a lot more activity next year, and that could be for a lot of different reasons. I'm curious to know, what do you think is going to happen between now and next year for that much activity? That's like literally, that's a lot of activity in comparison. Like, what could actually happen? And the only thing I could think of is prices or mortgage rates, but we'll see. They're anticipating new builds to kind of be stagnant. I don't know if y'all can see that, actually. My bad. Yeah, there we go. In terms of prices, so I can actually speak on this. I don't think I have the article, actually. I know Zillow just made the big Z. I'm about to start calling them that. They just made a revision. I know earlier in this year, I don't know if I have this article in here anywhere to be able to show you, but earlier this year they had a revision stating that they're anticipating what's it called, prices to go negative. And so their most recent, I think, that came within, at least I read it today or the other day. They just made a revision that pretty much said that prices are going to go up a little bit. If anything, it's going to be more flatline. That is kind of what I saw. So to C plus one of prices, that's kind of in line of what I'm seeing and what everybody else, what all the other experts are saying, which is another thing to think about, right? So should you really get into the market? It's one of those things where you have to look at the prices, right? So if prices are continuously going up, they're not really coming down to help you, then, I mean, hey, you make your choice. But in 2026, they anticipated to go up a little bit more, which that's more in line of what the average is, right? Of how much home prices actually go up over the course of time. And look at this, so we can see. Look at that. So mortgage rates. These are all, forecasts, right? So they forecast the 6.7 for mortgage rates of this year in 2025. And as of next year, they are going to anticipate 6%. So we saw that big jump in terms of sales for existing homes, which means resale homes, which is probably because of the interest rate, right? Because it's definitely not prices. These are all things for you to really think about. And of course, they are anticipating more job growth. So that is not going to force, unless something breaks, but that's not going to force the mortgage rates to go anything below 6 at that point in time. But here's a nice, pretty picture here that I'm about to share with you. And so the reason why I want to show you this, hope is coming onto your end pretty clear, is because you can see where the buyer markets are, where markets are pretty much, I guess, like, where buyers and sellers don't really have a say. This is what's really happening here. And if you're really, really considering purchasing, this is really important information, because then you'll know where is it that you can, how you essentially can write your offer and, make it a little bit more favorable to yourself rather than the seller. But it's really the areas that really took off since 2020. Midwest and Southeast, really. Those are the only places where I see a lot of buyer's market. Everywhere else is still a lot of a seller's market for the most part. Let me know what markets you guys are looking into specifically, and because that will actually help me. Drop it in the comments or even in the chat, because that will actually help me share with you what markets have motivated sellers, or at least I could probably pull up one of them so that you can go ahead and see. But I did want to do a poll, so give me a second, and I'm gonna pull the poll back up, and you let me know. You let me know, because I'm curious. Right? If mortgage rates really go down to 6, are you actually gonna buy? I don't know. I have like what's it called? A weird assumption that I don't think many people are gonna buy. I think that next year is gonna be very similar to what's going on this year. So just another slower market. But let me know. Do take care of that poll for me if you don't mind. If you have any questions, drop it in the comments, drop it in the chat. Drop it in the comments, of course, if you're on the replay. But if you're here live with me, shout outs to you for first and foremost. But drop your questions that you have, and let me know if you guys are enjoying this. Like what I just shared with you. Do you guys still want me to cover real changes that's happening in the market, just so you guys know? Or should I just go into buyer strategies and stuff like that can really help you in your market? Because, again, I'm here to give you guys an advantage. So it's up to you. The more information you guys give me, the better I go ahead and make these streams so that you guys can go ahead and accomplish your goals. And, of course, if you guys do need assistance or need a real estate agent to get connected to, you are always welcome to reach out to me. I think the link is in the description. You can just take care of that information that I do need to be able to partner you up with the right real estate agent. But once you take care of that, I'll reach out to you within about, let's just say, 48 hours, right? That's my turnaround time from now. Maybe sooner, who knows? But, yeah, no, if you don't mind, if you need a real estate agent to help you in a specific area, just go ahead and fill out that form, and that way I got you. But before I go over to the next segment, I just want to share this with you, because when I saw this, I personally was like, uh-oh. So as we know, there's a lot of new construction. And so these builders are getting smart, which doesn't really help you as a buyer. At least in certain markets, they're getting smart. Like they're putting their heads together. They're finding different strategies to be able to sell off some of this inventory that is just sitting because buyers don't want to buy. So let's just say this. Lennar, I think, started a trend that we're going to see across the entire nation, at least in those heavily buyer markets, which you saw was the Midwest and a lot of the Southeast. They're going to start a trend where they're going to be sharing to investors what homes that they can go ahead and buy. If you think this is good as a buyer, maybe if you're an investor, this is phenomenal news to you. But if you're just a buyer trying to purchase your own home for your own sake as a primary residence, this is not good. Because essentially what they're stating to each and every single one of these investors is buy our homes, take the risk as a builder. They're saying buy these homes to the investors, take the risk off of us so we can go ahead and continuously build more homes. But you have they're not forcing you to rent it out, but what are investors going to do? They're going to rent it out. So that not only takes inventory off of the market and prevents from them, I mean, I'm here for you guys, but who don't want less prices, cheaper prices? I mean, not always is cheap price a good deal, but in this case, if they're getting rid of inventory and allowing investors to scoop it up, this is not good. This is not good. I mean, it's a matter of time before every other builder starts to copy them and make it their own. So that's also something that maybe you can keep in mind as we go through the rest of 2025. Maybe you use this as like a guide, as like, all right, do I put my foot on the gas and really try to accomplish buy a home, or do I just continue to sit and wait and see what happens? But if I share with you this pretty picture here, you guys can see where how many completed homes are sitting on the market right now, just not being sold because buyers aren't buying for the most part. Right, a lot is not as many homes as what was going on in 2008. So, builders are going to intentionally slow down their build up until the point where maybe these investors start scooping in and taking the inventory off the market for these builders specifically. But when I saw this news, I was like, man, this is horrible. Oh man, I mean, this is not going to help anyone. But I'm here to prepare you. I'm not here to be, the Debbie Downer. To give you great, I'm here to give you good news, bad news, okay news. I just want you guys to be aware of what's happening, because something like this, I wish somebody prepared me this way. Shoot. Giving me this information to be able to then identify if it's the right time, or should I start positioning myself. And honestly, for everybody that wants to buy a home, if you're not trying to position yourself right now, like speaking to the right professionals, understanding what is it that you even need to do to get prepared, you really don't want to buy a home at that point, honestly speaking. Like, it's okay. You don't hurt my feelings. At the end of the day, you guys have your own plans that you guys need to take care of. It's you before me in every scenario. But speaking of the market in 2026, here's another article that I'll go ahead and share with you just really briefly. I'm not going to speak on it too much just because this is not me speaking now. Because you guys are probably like, yeah, Ronnie, you're a real estate agent, you're biased. And sure, call it what you want. The facts are the facts. All right. So, housing markets could remain stuck until 2026. So we did see rates kind of come down. We do see Lennar trying to implement some new strategies to go ahead and get investors to take the inventory off the market. We see prices are probably going to continuously either stabilize or continuously to rise over the course of the year. So, is the market really going to remain and continuously to be stuck? Time will only tell. But I'm only here to provide you with that information. You do what you want with it, because you are your own person. Right? Right. Alrighty. I think there was something here I wanted to share with you. Oh, no one answered my poll yet, so it's kind of hard to talk about this part yet. But let's just say, if mortgage rates do come down to 6%, they're anticipating that is going to help at least 5.5 more million households. Holy moly. Right, including 1.6 million renters. So there goes your 14% of more real estate sales occurring. So more buyer activity. And that's just, of course, because people can afford a little bit more, or at least it's now affordable for them. If more people answer that poll, then I would believe, or at least understand a little bit more of, how many people actually jump into the market. But right now we have a pretty quiet room right now. So Shout outs to you guys that's all lurking or preoccupied with whatever else that y'all had to do today. That y'all ain't want to show up, but nah, it's all good. Hope you're watching on the replay at least so that you can fully prepare yourself. Because if you at least don't prepare yourself, then whatever comes, that's entirely on you. But let's go ahead and talk about what strategies can you guys implement. And in fact, I talked about this last stream. So if you were there for the last stream, I apologize. But I have to share this piece with you guys all because, of course, there's down payment assistance everywhere. If you're in North Carolina, you can get upwards of $15,000 to help you with your down payment, closing costs. But of course, you have to be a first-time home buyer. There are qualifications that you can go ahead and do. I mean, that you have to comply with, right? So, actually, let's do Raleigh for this one, just to show you. Raleigh, North Carolina is in Wake County, bro. Why are you showing me Durham? Let's do 425 just because that's exactly what we did earlier. Let's do 3. Primary. Well, no, you never owned a home. Let's do that. Let's say your annual income is $75,000. And you guys can kind of see, right? So it's already populating. It's telling you how many programs that you could potentially qualify for. Let's say you are none of these. And if you are a veteran, salute. I appreciate you and thank you for your services, honestly. Let's say you are not a Native American. Let's say you are not any of these. And if you are, you probably have like 1 or 2 of them. That does open up and no one has disability. So there you go, 17 match programs. If I bump this up a little bit, because I know y'all balling out there nowadays, y'all making some money. There it goes. You guys can see it dropped it all the way down to 7, and that's literally with 100,000. That's 6 figures worth of salary, which that's in Raleigh. That's pretty good. I mean, really, really good. But enough about this. Go ahead. I'll actually drop this in the chat just so you guys can go ahead and utilize it. I have to drop it over here. So there you go. Take advantage of that. Oh, you guys can see my back of the back office. Didn't mean for y'all to see that. But go ahead and take advantage of that. Use the link to go ahead and put your specific scenario in. But if you're outside of North Carolina, I have something for everyone that's in Georgia at least. You're going to have to find, if you're in Georgia and a veteran, listen up, please. But outside of those 2 states, this is why I'm sharing with you this platform. Just go and look it up. Or whoever you're working with, ask them what down payment assistance is available for that state. But I was at a conference recently, and I was speaking with a real estate agent that works in Georgia. And so if you do need someone to get connected to in Georgia, I got you. I mean, this is my guy. He going to take care of you. In fact, he gave me this information. I was like, what? So if you're a veteran and living in Georgia, they have like this program where I didn't read on it. I'm just kind of trying to recollect our conversation. But again, if you're a VA and in Georgia, they have a program where they have a specific mortgage rate that's way below what we saw here today, right? So a lot of what we saw was 6s. So theirs, I want to say, started at, and don't quote me, right? The program is Georgia Dream, right? So go ahead and, actually it's not Georgia Dream. It's, what's it called? Peach Select VA. It's provided by Georgia Dream. But when he mentioned to me, like, yo, you can literally get into a program as a VA, mind you, VA, if you have a VA, please utilize it. Like, you worked your tail off, you did your time, you gotta use it, you gotta take advantage of it. It's only pros in your specific scenario, especially if you have access to it. But him mentioning that to me, you'll get a lower rate with a VA. I mean, way lower than what the market is going to give you. And when I say the market, I'm talking about whatever Mortgage News Daily is saying, right? So if I go ahead and pull up Mortgage News Daily, and I can literally show you right here for the 30-year mortgage for a VA, you're still in sixes, right? So 6.21 as of now. Right, so take what you want with it. But if you want a better rate and you're in Georgia, you better take advantage of this. Let me know if you guys have any questions, not specifically on this. I can connect you to the person that has the information on this. He was even telling me, like, he reached out to his lender partners, and they didn't even know about it, right? So I don't even know how brand new it is. I think, if I'm not mistaken, he actually reached out to someone, and they were like, it's not new. It's always been. They just don't promote these things, right? So you got to either find it yourself or know the person that knows this information, because otherwise it's stuff that is just not going to be put out there. And even being part of the program, as I'm recollecting our conversation, it's not something that's going to cost you more money. So, I mean, what more could you really, really ask for? But let me see if we have any questions that came in. Okay, no, we don't have any questions. So let's go ahead and truck through and talk about the big difference between FHA and conventional, because again, another conversation I was having. And we're just talking, picking each other's brains, seeing how is it that our businesses work and trying to help one another. And one thing I do know is a lot of people talk about PMI or even MIP, well, PMI being private mortgage insurance. That happens with conventional loans, whereas MIP happens with mortgage. That happens with it's mortgage interest payments, I think. I don't remember the exact name. But that happens with FHA loans. So I did my research as we were talking about it. I thought, right, and this is where I'll take accountability of everything that I do and I talk about. So I knew already that, I'm going to say PMI at this point. For anything, if you're using PMI, and this is looking at FHA and conventional. So if you're trying to go conventional and you put down less than 20%, you're going to have PMI. Generally speaking, that PMI is going to drop off after you've accrued at least 20% of equity in your property in itself. So that's cool, right? So that's what most people know. Most people put down 20% to avoid that PMI, and that PMI can easily be a couple $100. So, understandable. However, FHA, if you put down less than 10%, this is where I want to be real clear here, because I was under the impression that it's the life of the loan, but I did my research. I did a little bit more digging as I was having that conversation, and I was like, oh, wow, I just learned something new. So if you are going FHA and you're putting down less than 10%, you do have MIP for the life of the loan, which is also PMI. So just add on a couple of $100 to your monthly mortgage. If you put down at least 10%, this is the shocking part. And I was like, what? Oh, man, this is beautiful information. If you put down less than 10%, at least 10%, you have the MIP still, which is the PMI, but you only have it for 11 years. Ooh-wee. Now that right there, my friend, it's some beautiful news. I don't know about y'all, but when I was like, oh, it actually removes itself, which, we're talking about a couple $100 off of your monthly mortgage, which in all reality, if you think about it, that's, just going to help you, because property taxes are probably going to go up. Insurance is going to go up within that time span. So it will help at least bring your payment down a little bit more, but you got to put down at least 10%. That's the only kicker that I will say with this, which at least they gave you an out. Because before then, I didn't know that they even gave people outs. I just thought they kind of allow people to just get stuck with it, because they're giving you the ability. Because FHA, if I'm not mistaken, they have a higher debt to income ratio. and they allow you to put down a low down payment. So a lower down payment in retrospect to whatever else you're comparing it to. So, that's kind of like the reason why I was like, huh, that's pretty cool. If you put down 10%, that, you know, they allow you to take advantage of that, because you don't necessarily have to put down the 20%. But something to really think about. Any questions come in? Let's double check here. Oh, that's not good. No questions came in, so let's go ahead and move forward. And I'm going to start showing you guys where the motivated sellers are. Since you guys don't want to drop your markets, I highly encourage you, if you're watching on the replay, drop your markets. I'm not going to cover every single market. So if you drop your markets, the only good that it does for me is now I know what markets I should cover or at least talk about on the next stream. Just give me 1 second while I set this all up. And I think I can toss all of this. But in the meantime, if you guys are curious or wondering, I'm actually going to start doing I'm going to push out a newsletter publicly. So if you guys want to be involved in that, just let me know, and I'm more than happy to include you on that. Right now I do a newsletter, but that's literally for people that I've already been in contact with, or that I'm in contact with, was in contact with, and I'm just updating them on the market. Not so much of what we do here, right? In here, I think we go a little bit more in depth about everything that's going on. So that's good on your part. But if you just want like a quick tidbit of what's going on in the market on a weekly basis too, I drop that every Friday, where people can then see kind of what's up to date. And then, of course, if you want to ask questions, you want to tap in, you want to hear a little bit more of an in-depth not even analysis, but what's going on with the real estate market, then you pull up, you show up here, you show love, you share the stream, you like the stream, you share the stream again. Okay, but let me go ahead and share. Here is one of the markets, right? So this is in Georgia. Let's go ahead and zoom in a bit. So if this is your market, here's a motivated seller. What makes this person motivated? And for the most part, we're going to see this all across the board. So it's not necessarily just this person, because I don't know why exactly this person is selling, for crying out loud. Not my market, so I'm not going to check in on the seller at all. But what is making this seller motivated? Let me see. Where does it show you days on market? Here we go. So 34 days. Right, that's a telltale sign. And then also, this is the big sign, right? So, oh, look at that. This is the flipped home, unfortunately. So you can see it started at 420, yeah, just about 425. And look at the price cuts, right? So 2 weeks, 2 weeks, 2 weeks. That's a week. That's a couple of days. Oh, look at that. They try to pull the trick. I'm not going to tell you what trick that is. If you know, you know. Good for you if you know this trick. But as you guys can see, right? So constant 2 weeks, 2 weeks. Look, this right here is a really telltale sign. Like, this is a motivated. But that's that one. I actually have another one I'm going to drop. So let me go ahead and load that up while we wait. We have Austin, Texas. Again, a lot of what you need to look for, especially if you're trying to find motivated sellers, is days on market and how often is it that they're doing price cuts. So 118 days on market. What's those price cuts look like? And sometimes these price cuts, I mean, these homes that are seller motivated, they may not be the best of the best home, right? It could be they just priced it wrong initially, or it's a flipped home, or the house is just not what someone wants. So really do your due diligence, honestly. So they listed it. Wait, they said 118 days. Okay, I guess makes sense because we are in August. But look, you guys can see this. So they did just about once a month for whatever reason. They skipped June on doing a price cut. And also another way you could tell, look at the amount of the price cuts. If it gets larger and larger, that's a telltale sign. Come on now. Since we know that, I'll do one. I'll do after this one. I'll do one more. Let's do this one here. Mm-mm-mm. This is why I say drop your comments, or at least drop your locations, or at least when you have to drop your specific location, drop the location you're looking in, or maybe your friend is looking in. That way, I can literally provide you this. So this is in our market here. No, I did not speak to the seller. I don't know no one that wants to buy this house right now. In fact, I couldn't to see, but I already know it's a flipped home, so I'm not interested. Unless if my clients is interested. But 131 days on market. Some people aren't used to that. Ooh, they need to fix this. So we can see. Ooh, sorry. Shouldn't have done that. So they listed it and literally, what is that? I'll say about 2 weeks later, they came down on price. They came down on price a month later. They skipped June for whatever reason. Came down and again they did another one just a couple weeks ago. Let's go through the last one. And this is in Colorado. It's a nice home. And it's a really nice home. I hope this isn't a flipped home. But 68 days, so may not be too crazy. We may not see that many price cuts. Oh, look at that. It actually went pending. So they were listed and oh wow, they went pending twice. Ooh, I got no comments for this one. I have nothing to say about this one. In fact, I'm not gonna even speak on this because they went pending and they went up on price and then they went down. Yeah, shout outs to whoever is behind this. They went pending again and they still didn't mess with the price. But there's a lot of opportunity there, I'll tell you that. There's a lot of opportunity there. If you know what I know, yeah, go get that one. Okay. But let me know if you like that segment at least, right? Where I'm sharing with you motivated sellers. And of course, if you want to do me a favor and just let me know in the comments or at least in the chat where you guys are tapping in from, that would definitely help with providing you more tangible, more actionable items that you go ahead and walk away with at the end of this stream. So if you're on the if you're live right now, let me know if you like that, where you want me to go ahead and do that again. But if you're watching on a replay, be sure to let me know so that I can go ahead and do that on a more frequent basis. But I'm about to wrap it up here, honestly. Let me know if you guys have any questions, anything that you want to go ahead and ask me before I disappear. I'm going to kill this poll since No one wants to answer. Teardrop. But yeah, let me know if you guys have any questions. Even if you're on the replay, drop them in the comments. I'll be sure to get back to you, and answer the question, whether it's on the comments in itself or it's what's it called? Why is that pretty much further back? My bad, I got distracted. But whether it's on the comments in itself or I do it on the next live stream. But since no questions are coming through, I'm not going to sit here any longer. Y'all know where to find me. Y'all know how to reach out to me. Well, you should at least. If you guys need any help, go ahead and click the link in the description, especially if you want to be connected to a real estate agent in your local market. Be sure to go ahead and do that. That way you can start preparing yourself and be ahead of a lot of the buyers that aren't preparing themselves now because they're waiting for something. Somebody actually did answer it. I already ended it though. But also, if you are interested in being part of our newsletter, let me know as well. But peace out. See y'all later. I think the next stream, what I'm going to do is talk about builders' incentives and, of course, whatever hot news that does drop. So, builder incentive, especially now that Lennar just dropped that, we got to, y'all better get on top of these incentives because they are for sure not going to be here for long. So we're going to talk about builder incentives, what you can do to save on some new construction homes, strategies that you can go ahead and implement around it. And like I said, any real estate news that does come out, we'll touch on that just to update you on where the real estate market is. But come hang out with me the next time I am doing this. I will see y'all later. Peace out.